Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. I'm going to give you guys 4 signs that I see in my technical analysis that a potential stock market crash is coming here in 2019 or perhaps beginning of 2020. Before I get too much into that, I'm going to give you guys a quick background reminder of what's been going on with the S&P 500 and all the other indexes. In fact, we did break to all-time highs here. We broke the $3,000 level that we actually were consolidating at for a while. We broke it quite impulsively with a few nice green candles. So if you are bullish on the S&P 500, that is definitely a nice check mark for you. Seeing this nice breakout with 4 or 5 green candles at the end of a nice period of consolidation. You could compare it to 2015, where we did have something similar. We had a 1 to 2 year period of very low volatility. I mean, not much change in price. We were basically going nowhere in 2015 until we did break out here in the middle of 2016, and then we started grinding on higher and continued the bull market that's been going on since the 2008 crash, since 2009 basically. So it's actually been a now over 10-year bull market, if you still consider this the bull market. So that is what's been going on, and now let's get into the bear case that I've built around the S&P 500, why I think that the bull market that we've been seeing for the past 10 years is likely over and potentially very soon. Let's get right into it. So the first sign that I see is actually not on this chart. It is on the volatility index on the VIX, and that's why I'm going to switch to VIX. All right, so this is the VIX, and if you don't know what it is, it's basically a measure of the volatility in the market. So it actually has an inverse correlation to the S&P 500, and what I mean by that is that when the VIX spikes up, that is actually a sign of a crash in the S&P 500. So this here in May was actually a crash in the S&P 500. Same thing here, same thing here. So you get the point. When the VIX goes up, the S&P 500 goes down, and vice versa. Typically, when volatility is very low, it means that the S&P 500 is just slowly grinding up in percentage. Now that leads me to my point on this VIX graph, and that is that we are nearing major support, and this is a $12 support here, and you can go back to 2000 since the beginning of 2018. So basically since the beginning of this whole consolidation period that we've seen on the stock market, the $12 level has actually acted as support, and every time we touch the $12 level, we have a correction. You can see that happened here in May, here in July. We'll see if it happens now, but it did happen here again, even though we did hug the $12 level for a while. We did grind up for a while before we actually had the spike up, but it did happen at $12 again. So we'll see if this is any different. You can see here in July, it was almost the day it touched the $12 level, we had a nice correction. So again, that's definitely a sign to look at, and definitely something to consider when talking about the timing of the next potential crash. This could definitely be the first sign that we get for a potential correction in the next few weeks. So now let's get into the second sign that I see on my charts, and for that let's go back to the S&P 500. and we are on the weekly chart, so each candle is a week worth of action, and this chart is actually used to predict much more long-term moves. And now the weekly chart is obviously much more of a long-term predictor. When I see, for example, a divergence building on the weekly chart, it's something that will play out over months. Not just a few days, not just a few weeks, but definitely months. So again, on the weekly chart, this is something that you have to be extremely patient with. Just because you see divergence on the weekly chart at one point doesn't mean it's going to play out the very next day. Definitely not most of the time. It will take a while to play out, and it will play out over many, many weeks. So that brings me on to my point, and that is the divergence that we have been seeing on the weekly chart, and that is something that I've been talking about on this channel for a while, and you can see the divergence that I'm talking about here. Um, and what I mean by that is that the price is continuing higher. You can see we're grinding up on higher, making all-time highs, but the MACD doesn't agree. The MACD is actually going down, and that's not a very good sign for the bulls. And you can see the same thing is being said here by the RSI. We can draw a line here down from this point all the way down here. And until this has been cleared, I do not see how I could have a bullish outlook on the market until this weekly divergence on the MACD and RSI is cleared, until any more bearish signals on this chart, I'm going to remain bearish. And so this is one of the points that is actually quite different to the 2015 consolidation period, and that is here in 2015 the market actually let the MACD breathe a little bit before heading on higher, and that is what I was waiting for here when we crashed. I was waiting for a little bit of action down here, and I was not expecting a huge V-shaped recovery like this, and this is not very healthy for the market. This just means that we are back exactly where we were, as if we had never stopped. You can draw a line here as if this crash didn't happen. It would be the same thing, which is not the case for 2015. This was definitely not a V-shaped recovery. It took many weeks before the market recovered, and then it went down again. Again, took many weeks before it started grinding back up and breaking out. This was not the case here. This huge period of consolidation has just been crash, recovery, and potentially another crash. So uh, that's one reason why 2015 is definitely different to what we're seeing now. I do not agree with anyone saying that it's exactly the same thing, but because it's clearly not the same thing. That we were not seeing the same technicals, we're not seeing the same sell signals. It is much more aggressive, much more overbought, and much more of a topping pattern than what we saw in 2015. Now let's get a little bit away from the weekly chart and try to pinpoint on the daily chart what we can see on the technicals of the daily chart. I'm going to remove these two lines here. There. All right, so on the daily chart, sorry, we are getting to overbought levels on the RSI, and that is definitely something to look at. Every time we get overbought, you can see we have a correction again here, overbought, correction, overbought here, huge correction. So we are getting close to the overbought. Now that doesn't necessarily mean that there's going to be a crash, but it definitely means that price will stop rising, because nothing goes up forever and ever. It just won't. It will break the trend line at one point. And if this break is impulsive enough, and if it happens soon enough, it could send us down back below this $3,000 level. And what this would mean would actually make this a false breakout, and that is actually very bearish. So That is why I'm putting so much weight onto this RSI reading. It tells me that this slow grind, this grind up will not necessarily last, and once this trend line gives in, perhaps the $3,000 level will give in at the same time and bring in short sellers, and that will make the correction that more impulsive. And when you see a stock market crash, that is basically what it is. It is the break of a trend line that begins some kind of a domino effect, passing down, breaking levels below it, and actually accumulating short sellers that want to get into the short selling action. And that's especially seen after periods of a huge slow grind like this, especially after a couple of months of slow grind up. Well, there are many short sellers that are waiting to short the break of this trend line and potentially also the break of this all-time high. So that is definitely something to look at. Watch for this break of trend line, and I can tell you, if you are an active trader, I will definitely be watching this break and perhaps shorting it down to the $3,000 level, and then we'll see what happens once we get to the $3,000 level. But definitely some profits to be made off of this break of trend line that will happen in the next few days. At least I think so. So the last and final reason that I see a potential crash in the next few weeks is the daily divergence, and that is something that I've said many times on the channel, and the daily divergence is still intact. We can draw a downtrend line like this, and just like the divergence that I just explained on the weekly chart, the daily divergence works exactly the same way, but obviously more short term, and could definitely play out very quickly, especially if we see that break of trend line coming off of overbought on the RSI, breaking down this all-time high. That would all be a huge domino effect with this daily divergence that would just all bring the prices down, and we could definitely see move down back here, potentially here. I did not put the levels down. I'll be probably making a video with potential levels to target if we do see a crash. I'll probably wait till we see the break of the trend line before I do that. But again, this daily divergence is just something that is waiting to play out and waiting for a catalyst, a factor, that a sell signal that will just trigger the entire move down. Now, obviously, this does not necessarily need to happen, and we could just have a small correction and then bounce off the $3,000 level. I also obviously don't want to completely exclude that scenario. If we come back to the $3,000 level and bounce up, we could burn through the divergence, and then I'll potentially review my technical analysis for the next video. But that, again, could definitely happen. Anything can happen in the stock market. I'm definitely not always right. So yeah, get prepared to potentially buy in or sell at this $3,000 level once we come back down to it. Yeah, so that's pretty much all I wanted to talk about in this video. I hope you guys enjoyed. If you did, make sure to like the video and subscribe if you haven't already. In the meantime, good luck on your trading, and see you next time.